on ET Now. I am Snehi Shah. With me is Ankita Saxena, and we'll be taking you through all the big buzzers in today's trade. Before we do that, let's interact with the management of an IPO that's going to be hitting D Street on July 7. We're talking about TFS. It's a travel QSR and lounge sector operator in airports in India. Let's interact with the management. Varun Kapoor, Managing Director and Chief Executive Officer, as well as Vikas Vinod Kapoor, the Chief Financial Officer of Travel Food Services. Varun and Vikas, thank you so much for joining us. Varun, let's come to you first. What are the key details about your company and strategic guidance going ahead? Help our viewers with some details about how you are going to be using the proceeds from the IPO.
In terms of the business, so very simply put, we operate in the aviation segment in two areas. We run travel QSR and lounges at airports. These travel QSR would be restaurants, F&B outlets across airports, whether cafes, QSR units, bars. This would be, in terms of casual dine, multiple units, as well as we operate in lounges, as you see very much across airports in India. We're part of the aviation segment, which I think in the case of our country has been growing significantly over the last decade or so, and equally, with the type of initiatives happening from the government, from airport operators, including growth by airlines as well across their network. We see a lot of opportunity in that segment continuing forward as well over the next years ahead of us as well.
Right, Varun, also what kind of disruptions can we expect in the lounge services, as a lot of freebies from banks are now coming down? Any pressure on yields that we can expect going ahead?
Sure, that's so in terms of lounges, what we operate, we work in these lounges with multiple partners, whether it is airlines, whether banking and credit card partners, other access programs as well. And what you've seen is no doubt lounges from a customer journey, I think more and more being important, not only in India, but globally as well. Lounges are being an integral part as consumers want experiences, want great spaces to be in while they travel, very much so, both during business and leisure travel. And for that very reason, we see consumers really looking forward to lounge experiences. And you can see that constant trend of improving grander lounge experiences, people really looking forward, whether it's a food experience, whether it could be this is an auditorium in the lounge, a library there, a personal space that one can actually unwind and maybe have a Zoom call in a private space. These areas in a lounge, no doubt, you can see that elevation happening. And I think in that mind, coupled with actually, in fact, of India, the higher credit card penetrations that are happening these days, obviously a lot of catch up to do versus other countries, but very much on the trend. So I think all of that coupled, I think lounges tend to be, and we see that as well in our business. People appreciate that. Consumers are keen on that, and we actually strive hopefully to deliver that. And I think with that in mind, we've seen actually the business be very robust on that perspective, as our numbers would show you as well. And it looks to be very much a continuing trend for travel, both in India and I think globally as well, very much.
Okay, and Vikas, coming to you, talk to us a little bit about the industry that you operate in. At what rate is this industry expected to grow, and what could be the growth rate for your company going forward?
So we are in one of the fastest growing aviation market in the world, and that's where India stands. From that perspective, the runway is very large. From that perspective, if you look at it, sheer number of airports that are going to double up in terms of capacity itself is there. There is a huge value unlock which is happening in terms of supply chain. Within the airports, terminals are getting expanded, new terminals are getting built. So there is a vast opportunity within India in terms of the airport space.
All right, gentlemen, thank you so much for taking the time out and telling us about your company and the IPO that's going to open up soon for subscription. Thank you so much. But let's get started with the show then, with all the stocks that are in focus today, either on the back of news flow or on the back of technicals. And on the technicals, now we are joined by Rajesh Bhosale, who's a technical analyst in Angel One. And from our research team, we are joined by Ravinder. Hi, good afternoon to both of you, and thank you so much for joining us. Let's get going with the show then. Rajesh, your first stock is Ashok Leyland. Tell us, what do you see on the charts for Ashok Leyland? And this stock hasn't really done much in the past 6 months. From here on, do you see some bit of a breakout that's happening on the charts for Ashok Leyland?
So yes, if we see technically last 6 months, it has not done anything. But from the June swing lows, the stock has seen some traction. From the levels of 230, it has moved up to 250 levels. And post the recent auto numbers, the stock is holding on to its gain. Even if we see the weekly chart, we are seeing a cup and handle price pattern breakout, and also RSI, it is crossing above 60 after a very long time. So we now think that there could be outperformance in this counter, and hence expect the stock to move towards the levels of 265 to 270. And on the downside, we are seeing that the stock is showing some resilience. So somewhere around 240, 242, the stock has a very strong support zone.
Okay, so that's the take on Ashok Leyland. In the next levels to watch out for, while we're talking about the auto space, good monsoon will aid the auto industry, and the two-wheeler segment is expected to do well. That's the word coming in from FADA as well as the Gantharia. Let's go across and once again listen into what they had to say about the entire auto space.
This would not be the year wherein we see double-digit growth. It will be more of a single-digit growth, and that's what we are witnessing. During monsoons, it's kind of subdued, and we are expecting the upcoming festival season would be good because there's plenty of rainfall above normal monsoon is there as far as prediction is concerned. So we're looking forward for the festival season. Two-wheeler definitely is one of the best performing out of the pack of all the segments. And though last month was kind of more of subdued, but we are still working on the numbers. Let's see what the numbers tell us, and only then probably we'll be able to give you much in-depth analysis as far as the segment-wise share is concerned. But yes, overall, if you see for this calendar year, two-wheelers has performed better than the rest of the pack.
This is a season where the tractors do well. So I think see there are different cycles. I think the commercial vehicle space will probably slow down because we had 3 great years in the past. Tractors, if you see, last 2 years were roughly flat, or hardly any growth or even degrowth to some extent. We've not even crossed the 2023 numbers. So this year was expected to be a good year for tractors, and good monsoons always play that catalyst for the tractor numbers. So I think tractor numbers have come through, and now I think it's time for two-wheelers and auto the four-wheelers to have a slightly better festive season. And I would even put all these AC companies or the home durable companies in that same pack.
All right, moving on then to a counter that's been in focus since yesterday is Apollo Hospitals. Now, we all know the news of Apollo Hospitals that separately listing its pharmacy business, but now Nuvama has come out with a note, and they're maintaining they've hiked the target price to 6,000 to 8,635 rupees versus the earlier 8,200 rupees. They've unveiled that Apollo has unveiled plans to restructure its pharmacy business, and they to list the omni-channel pharmacy business in 18 to 21 months. That's offering 195 shares of a new company for every 100 shares of Apollo Hospitals. And our management is guiding for a 20% CAGR in revenue to 25,000 crore rupees with the 7% margin, that is 350 bips in aggressive. Value of the Apollo Hospitals on the SOTP basis, valuing the hospital business at 26x of June 27 estimated EBITDA, and pharmacy at 22x EBITDA. And on the back of this note, Apollo Hospitals is in focus today. Now, we did see that run up on Apollo Hospitals, but now it is succumbing to selling pressure. A bit of a profit booking coming in on Apollo Hospitals, is now down 0.6% in trade.
Okay, so that's Apollo Hospitals, but we interacted with the management of Apollo Hospitals earlier in the day. Sunita Reddy, Managing Director, she spoke to us about the management's targets for the new demerged company. Let's go across and listen into what she had to tell us.
I think basic is to look at KeyMed grew 17%, so KeyMed will grow by 19%. The whole entity will grow by 20%. And this is the deconstruct of the EBITDA that will happen in 2027. If you look at total revenues will move from the current 16,267 crores to 25,000 crores. EBITDA margin will be at 7%. Absolute EBITDA 1,750 crores. 1,000 crores of EBITDA coming from offline pharmacy. 700 crores of EBITDA coming from KeyMed, and 50 crores of EBITDA coming from the digital.
Okay, so that's Apollo Hospitals and the management on their view on how the demerged company is expected to perform. Let's move away from that and talk about IndusInd Bank, one of of the biggest losers on the Nifty 50 today on the back of a Goldman Sachs note coming in negative in nature. Let's talk about what the note says, because Goldman Sachs has downgraded the stock to a sell from a neutral rating but has hiked the target price to 722 from 634 rupees per share earlier. They believe that the bank has a weaker growth profile going ahead, and on the back of that, they've cut their earnings per share estimate by 25% and 17% for FY26 and FY27 respectively. The cut is driven by loss of market share in key loan portfolios and deposits, and they also believe that revenue engines are slowing down from the bank and operational controls remain challenging. They say that this has now become a structurally weaker franchise, and return on asset is also set to be lower going ahead, and persistent margin pressure is likely to continue on weaker yield trajectory as well as elevated funding costs. So negative call coming in from Goldman Sachs on IndusInd Bank. The stock continues to be under pressure, has picked up slightly from the day's low, but nonetheless a 2.3% cut coming in on IndusInd Bank as we speak.
All right, IndusInd Bank feeling under pressure on the back of that note by Goldman Sachs. But Ravindra, you have picked out Lupin for us. Tell us, what's the news flow on Lupin?
Well, yes, Lupin is in focus, where company has announced that it has received approval from the US FDA for its abbreviated new drug application for loteprednol etabonate ophthalmic gel, and the Lupin is the exclusive first to file for this product and is eligible for 180 days of generic drug exclusivity, and the product will be manufactured in the at Lupin's Pithampur facility in India, and the gel is used for the treatment of postoperative inflammation and pain following ocular surgery, and it has an estimated annual sales of $29 million in the US as per IQVIA for March from till May 2025. Stock was up more than 1% in the first half of the session, but now it has erased all its gain, and the stock is now down approx 1%.
0.7% cut coming in on Lupin despite a positive news flow. Rajesh, coming to you, IGL is the stock that you've picked out for us. Now in today's trade, contrary to what the broader movement has been in the market, these CGT stocks are doing very well, the likes of Gujarat Gas, IGL, MGL. Out of that, give us a chart check on what IGL is expected to do and what are the levels that you're spotting.
Yeah, so the entire oil and gas space are showing traction in today's session. In fact, if we see IGL, it is breaking above the 215 levels, which has been acting as a resistance for 4-5 times in the last 6 months. So we are seeing a strong cup and handle price breakout. Also on the futures front, we are seeing long formation and volumes are also very decent. So we expect this positive momentum to continue. Possibly technically, the targets head towards the 230 to 235 levels. And on the downside, if we see, we are seeing a strong base around 210, where a strong 200 DMA support is placed.
All right, keeping with the oil and gas space, then big reforms coming for the gas-based economy. Sources say the government is eyeing amendments to the PNGRC Act to accelerate reforms. My colleague Prakash Priyadarshi is joining in with the details of that story.
Yes, with an objective to become a gas-based economy, the government is planning to make mega reforms in gas marketing and pipeline infrastructure, very significant development coming in. In fact, the process has been initiated and that will be done through necessary amendments to the existing act. Sources are indicating that the Oil Ministry has prepared a cabinet note to make necessary amendments to PNGRB Act. In fact, the ministry will seek cabinet approval soon to implement reforms in gas marketing and pipeline infrastructure. We're given to understand that the marketing of pipeline infrastructure will be developed for all kind of energy sources. In fact, PNGRB will be empowered to regulate pipeline infrastructure of all type of sources. There'll be a transport system operator that will be called a TSO, which will manage all common carrier pipelines in the country. In fact, transport system operator will be brought in under PNGRB regulation. Natural gas pipeline of GAIL, including other companies, will be part of TSO, and government will hold a majority stake in transport system operator. Companies such as ONGC, HPCL, GAIL, IOCL and EIL will hold equal minority stake in the company.
All right, moving on then to the next counter that is in focus today, and that is KPIT Tech, where Goldman Sachs has maintained a neutral stance and reduced the target price to 1,230 rupees from an earlier 1,280 rupees. Now, they expect a modest start to fiscal FY26 and growth to be better in the second half. And the auto ER&D spending and the deal closures remain rather subdued in the ongoing uncertain tariff environment. They do not see any major deal closures in the near term, and in the back of that, they've cut the target price. And in the back of that, KPIT Tech is in focus today, currently trading with cuts of 0.1%.
Okay, so that's KPIT Tech in today's trading session. Ravinder, coming to you, JSW Steel is the stock that you've picked out for us. Tell us what's the news flow here.
Well, as JSW Steel is in focus, the Antique has come out with a note and they have maintained their whole rating with target price of rupees 905. They say that the volume growth and raw material security to drive profitability of the JSW Steel and aggressive expansion plans are underway for the company. They say that the domestic steel demand remains strong and the steel prices has recovered post the imposition of safeguard duty by the government of India, and lower coking coal cost and lower domestic iron ore price will aid steel spread going forward. So back of this note, JSW Steel is in focus.
Alright, moving on from JSW Steel on the back of that news flow to JSW Steel on the charts. Rajesh, tell us what you see in the charts for JSW Steel.
Yeah, so the entire metal space is in burst in today's session, especially JSW Steel. It has been trading in a symmetrical pattern for last more than 6 months, and after this strong consolidation, we are seeing a price and volume breakout. Along with that, if we see the prices are crossing above its May swing high, and the RSI as well is supporting this positive. We expect the stock to head towards its previous high of 1075 and possibly towards the 1120 levels. The breakout levels around 1040 is likely to act as a support, and after that 1020 is also a strong support. So this looks a buy on dip counter for a fresh momentum in the near term.
So buy on dips is a strategy on JSW Steel coming from Rajesh. Let's move away from that and talk about another stock that's not doing very well in today's trade. That's SBI Card, because along with IndusInd Bank, Goldman Sachs has also come out with a note on SBI Card wherein they've cut the EPS by 9.5 to 7 and 7.8% in FY26 and FY27. They see positives reflected in the price already, and they're saying that sharp re-rating balances the risk reward that they're spotting for the stock right now. They believe that credit costs and growth will be key focus areas in the near term, and they also believe that growth will start accelerating in second half of FY26 on improving ROAs and loan growth uptick. The earnings per share growth may be gradual due to slow loan conversion, muted leverage gains and higher credit costs, and increased they have increased their credit cost assumptions by 50 bips each in FY26 and FY27 to 7.5 and 6.5% respectively. So that's a key negative point that Goldman Sachs is penciling in for SBI Card, and on the back of that, the stock is trading under pressure, 2% cut as we speak.
Alright, that's SBI Card trading in the red on the back of that note coming out. But coming to you now, Rajesh, you picked out one which is doing well today. That's Tata Communications. That's up and away 5% in trade. In fact, in the last few weeks, this counter has started picking up steam. From here on, do you see this momentum to continue?
Yeah, so on the chart structure, the formation is very strong. We are seeing a cup and handle pattern breakout, and also if we see the stock is holding about 200 DMA. So we saw gap up opening, and then after gap up there was an intraday dip, but that dip has been bought. So buyers are attracting demand at lower levels, and we expect this move to continue, possibly towards the 1900 levels. Now the breakout levels is around 1750 is a strong base, and any dip towards it should be bought.
Okay, so that's the take on Tata Communication. But moving on, Ravinder, coming to you for Ambuja Cements, also in focus on the back of a brokerage note, I believe.
Well, as Ambuja Cement is in focus on the back of brokerage note, where Nuvama has come out with a note and they have maintained their buy rating with target price of rupees 694. They say that the management expect capacity utilization of the industry to improve marginally, and company expect cement demand to be healthy, which is driven by the government spending on infra project, and they like Ambuja due to its healthy capex plans and measures being undertaken for the cost efficiency improvement. So back of this, Ambuja Cement is in focus.
Alright, that's Ambuja Cement on the back of that news flow. But another from cement pack, Rajesh, you've picked out Ultratech Cement for us. Tell us what do you see on the charts for Ultratech Cement. From what I see, it's in the last one month it has picked up a lot of steam. 11% uptick coming in for Ultratech Cement. Tell us, do you see this to continue?
Yeah, so we are bullish on the cement pack as well. And if we see Ultratech Cement, as you highlighted, it has sharply moved from the 11,000 levels. And if we see the weekly chart, the stock has entered uncharted territory, crossing its previous swing high. So the stock has been trading in a range since last June, and now a fresh breakout is witnessed in uncharted territory. So we expect after a consolidation of last 1 year, the stock is possibly headed towards 13,500. So bias is positive. The breakout levels around 12,000 is likely to act as a support, and in the near term we expect the cement stocks to perform very well.
500 is the upside that Rajesh is spotting for Ultratech, and bullish overall on the entire cement space. Let's move away from that and talk about MOIL, because this stock is in focus. The company has increased by 2% the prices of all ferro grades manganese ore with manganese content below 44%, at 44 and above 44%, with effect from the 1st of July as per a stock exchange filing by the company. Similarly, the prices of all chemical grades have been increased by 2% effectively 1st July, and this is what the announcement has also said. And chemical grade manganese ore, remember, is specifically used in chemical processes, battery production and other non-metallurgical applications. The prices have been increased for the month of July. So positive news flow coming in for the company, and almost a 1.5% uptick is what we're seeing on the stock as we speak.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more buzzers on the other side. Stay tuned.